He's the chairman of the HDFC Bank. He served Government of India for 35 years as a member of the Indian Administrative Service. He has mainly worked in areas of finance and economic policy, infrastructure, petroleum and natural gas. In the Union government, he has held various posts such as Secretary to Government of India in the Ministry of Finance, Department of Economic Affairs from 2019 to 20. And it is a pleasure to welcome you here in our midst, sir. A warm welcome to both of you. I now hand it over the charge of this fireside chat to the moderator, Mr. Tamal Bandyopadhyay.
Very good afternoon. Welcome to this fireside chat, and I'm sure that your belly must be on fire now because it's getting late for lunch, right? So, isn't that? So we'll start without any large introduction, and if it's okay, we take one or two questions from the audience. That's the incentive to stay till lunchtime, just to be with us. Okay, so just have a microphone there with the audience. As and when we require, we'll ask them. And Mr. Chakraborty, shall I call you Mr. Chakraborty? Atanu, what is the? Atanu. Atanu is the ex-bureaucrat, Economic Affairs, Ministry for Finance. So a lot of hats you wear. Also, HDFC Bank Chairman, non-executive Chairman, HDFC, as you know, post-merger, it's the 5th largest in terms of value, market value, globally among the listed banks. But this has nothing to do with HDFC Bank. It's a general issue of that express highway and jam Trinity. Those are the kind of thing, essentially financial inclusion, tech-based financial inclusion, if I may say so. We'll discuss that. Let me play a little bit of devil's advocate. There are a lot of talks since morning I have been here, and all the data, 51.4 crore. More than 1/3 of India have been covered by PMJDY starting in August 2014. It's one of the largest initiative in this space globally. And we are pretty happy. We keep on saying this. But if you see, I think the ground reality is slightly different. The average money kept is little more than 4,000. It's driven by only public sector banks. And you ask the public sector banks, hand on heart, are they happy with the Jan Dhan Yojana program? They will say no, because the money that they incur to keep an account does not cover by 4,000 rupees. The cost is much higher. And if you look at if you talk to the beneficiaries, the so-called beneficiaries, they don't know much of it also. Like Jan Dhan also give you a sort of overdraft facility. I'll say not even 1% knows about that. They don't even know that. We talk about technology, they don't even know that how much money is kept, which number to dial to get what is my bank account, residual money, etc., etc. So it's very good to talk in this 5-star hotel hall, but I don't think I mean, that way we should be. There are a lot of, rather put it this way, I think there's a long way to cover to make it really meaningful. And it's only about savings, it's only about, we talk about, I don't know, is it a liability instrument, is it an asset instrument, how does the government believe and how the bankers think. It's there, and on its own it's going. One benefit, of course, is that all the direct money which is given by government, which was going to the beneficiaries, there's a lot of leakage. That has stopped. That's the single most benefit. About other part, I have my own doubts. So with that, let me start with you, sir. The JAM, Trinity, and PMJDY, that's only the beginning. We'll discuss so many other things. So as an ex-bureaucrat and now heading a bank, even though in a non-executive way, a very large bank, second largest bank in India in terms of assets. So tell us your preliminary remarks on that.
Well, partly you are right, Tamal, that on the face of it, if we see, we divide in 3 parts: the inclusion, usage, and quality. When we look at inclusion, it's been a massive success. That's how it was meant to be. And why did we nationalize the banks at the first place? Because the entire savings which were getting collected in the country were getting into very few hands. Money was hardly available to anybody else, and even for people to save their money, everything else was an issue in '69, and That's how the nationalization of banks happened. Of course, subsequently, private banks came in and have a fairly large share. Along the way, it was felt that, inclusion, more people should come into the banking system, both by way of savings as well as by way of assets. So the push for rural banking, rural branches, as well as PSL, that's the
Priority sector.
priority sector lending, which is to MSME, micro enterprises, to small and marginal farmer, and so and so forth. However, it again went to a very small portion because they didn't have access to banking. So this inclusion, which has taken inclusion for India to 78% against a global developing country average of 72%, has been a massive, massive success to start with. So I guess if we look at the glass now, whether half full or half empty, I'll come to that part. About 35% of the accounts are not very well operated. Let me put it this way, 65% are. Because
So 35%
out of
zero balance, you're saying?
They have zero balance, and because they are permitted to have zero balance, many times even Government of India's accounts are also permitted to have zero balance when the money flows out of it. So, the money tends to be lower, but I'll come to that later. About 54% of that has large amount of flows of DBT. But let's look at the 14% which has no DBT flow, but have very substantial flow. And the 54% has DBT plus kind of a flow. Therefore, it's not that it's a completely empty box. It is the glass which is substantially full, but it needs to go further. I agree with you, a whole lot of work needs to be done on financial literacy. Financial literacy till now, if you ask anybody in the banking setup, is looked at something which is non-glamorous. Nobody would want to take up this work, but I guess this is what one needs to go into. Secondly, this is also an area where I not look at credit, but I look at the liability side. When people want in rural area to save, where else they can save? This is the right place to save. Thirdly, because their Aadhaar has been brought in, it's very easy to avoid frauds, to which I'll come subsequently. At least the AML, CFT part gets taken care of upfront. Thirdly, my own personal experience when I was Secretary DA in the early part of pandemic, when Jan Kalyan package was devised, both US and UK were facing massive issues in distributing money. Part of it was they were giving doles. We were not giving as much doles, but part of the subsidy was to flow in quick time. While there were queues in US to encash checks, they were given large checks. Our money went into account and people could draw, and that came from a third-party agency, their survey. The money went in within 8 days, about $6 billion, and about $4 billion was also withdrawn within another 14 days.
I'm not only talking about the pricing of some of the microfinance entities, which is relatively higher than what it was even 2 years back, ever since Reserve Bank of India freed the cap on interest rate. So the first opportunity they have hiked because they lost money during COVID. So they have that excuses. The other part is this, all those app-based, the so-called loan apps. Now, Reserve Bank of India does not give any license to loan apps per se, but the NBFC licenses, and they are using loan apps. Okay, some of them at least NBFCs. And the interest rate could be 60%, 80% or something like that. They're giving money to 500 rupees to 5,000 rupees. College students going to beer bar, taking the money from there. Underprivileged men and women for their daughter's birthday, ordering pizza, taking money from there and all. And of course, the delinquency is also going up. People are over leveraged. So in the name of financial inclusion, etc., you are actually encouraging people to over leverage, because the credit bureau data says those kind of borrowers are, many of the borrowers, I think more than 50% have exposed to at least five such lending institutions. So what's happening there? I mean, in the name of technology and fintech and all, are you taking some of the system is taking advantage of that, and it's basically exploitation? It's a money lender in different grab.
Tamal, that worries me too. The manner in which these loan apps have designed themselves, the money lent is for a very short time. Therefore, the borrower doesn't even realize the inherent interest rates in those kind of apps. And though they are all unsecured loans, they tend to borrow very quickly. They tend to also sort of return in time to keep their CIBIL score. But that does pose an issue, because these unsecured personal loans are many times pure consumption loans. It doesn't happen as much in rural areas because these fintechs have not reached out there. It is amongst the Indian millennial crowds very substantially, and where it is not asset-based. And certainly, they are again those fintechs which borrow from another NBFC, who in turn possibly may be borrowing from banks, do create a possible systemic domino impact threat, at least. To that extent, they are a threat to the stability of the financial system. And that's the reason RBI also came down with increased risk weightage on this particular part of it, so that, but of course it had its own nuances. It ended up hurting something else, but nevertheless, it did cut down financing to NBFCs and change the pricing. However, your other question on pricing for those who are borrowing through JAM is something which, on SHGs, the pricing has gone right up to 28 to 30% at times because of the cost of reach. JAM has enabled that the reach is much, much easier. However, if you're wanting to give an asset, some amount of cost is inherent. Well, as things go along, more competition builds up, the pricing will come down by itself. And that's happening. Plus the stress of, actually banks, both PSBs and private sector banks have to realize that there's money to be made here. There's actually money to be made here. I have not seen too much of delinquencies here, certainly not large-scale delinquencies. And they should also look at this, and actually very useful way of looking at it for garnering liabilities, which they need. And it's a very diverse, stable source of liabilities. So on pricing, I would leave it to competition. But this Shylockism, possibly the regulatory push on this should sort of the intra-NBFC competition of lending to fintech head over heels possibly should stop with the risk weightages increase.
One thing you just pointed out is very interesting, that banks should look at this segment of customers also as a source of liability. Now in India, right from the day when Dr. Reddy, 2006 April policy, it started the using financial inclusion. Financial inclusion it just means offering, or rather getting an access, these people who do not have access to the banking system in terms of credit, not the not bank's liability and their savings. You know, so how do you actually make them savers? How do you encourage them to save, and save not with the RNBCs, which was earlier the PLS and Sahara and people losing money, or the various other schemes, but with the banking system, with the BCs and the bank partners, and move ahead. But because it's I mean. You know this, you were part of, you headed the Department of Economic Affairs, and everybody now talks about savings as a part of GDP, what's happening there, going down, all those kind of stuff. So how do you actually make saving is equally important as well as giving credit for that segment?
Well, you have hit the nail on the head, as always. If you look at it, in the past, we have experience of institutions that have done so. Look at UTI, which sold equities to people at the time when people thought it is, it is pure gambling. Then you have LIC, which has sold insurance to most of the unbanked villages. I have seen in very remote areas in villages where insurance policies have been sold. So these are the two institutions which have, and that time there was no digital expressway available, nothing of the sort available. Today we have roughly 785 million smartphones which people have, and there are users in the country. So there are multiple users of smartphones in the country who are using the smartphones. It's not that digitally today, people cannot transact. People do their video calls from the villages, and there's a huge amount of migrations out of very remote, poor areas of the country, and the money again goes back. So they do need banking. And there's a whole network of banking correspondents which has come up. It is not just branches. More than a million banking correspondent. I am just trying to look at the number. I don't have the number at hand. But there's a whole lot of banking correspondents. I don't have the correct number with me, whose number has grown tremendously big. Who are being also leveraged along with the post office. Post office itself is a banking correspondent now. So there are models available, there are means available, and technology already, as you mentioned, is available to capture the liability. The day you capture the liability, because in the more developed urban areas, people understand risks better while investing. They are not going to remain in time deposits for too long. They will move into equities, they will move into mutual funds, they'll move into ETFs. So banks will have to use these areas to capture liabilities. It is such a large basin available to capture the liabilities, and the ways are this. There are means available, and there's money available. It's not the savings rates have gone down. People have started consuming more after COVID. Perhaps the mindsets have changed, but that per se is not the case. It is asset classes have become much more diverse, which has taken the money from the banking system per se into other areas. Therefore, while this also improves formalization of economy, it also gives banks liabilities, which is their first requirements. They need more liabilities, which means more savings gets channelized through this route. These are the ways to do it. But it is hard work. Let me put it this way. It calls for going remotely. But when you go remotely to get savings, you also get PSL, priority sector lending. Then you don't have to, banks don't have to give money just to NABARD or to other agencies.
One very one very sensitive issue is this, you know, when it comes to UPI, is the world's, what do you say, the fastest growing this particular segment. With lot of pride, we tell the world we have done it, and rightly so. All the transactions. I was in Bodi, which is on the border of Mumbai and Maharashtra and Gujarat. There for 4 days, for every transaction, right from buying fruits to having a cup of tea, I use the Google Pay with a bank, and everything, right from 10 rupees to 500 rupees to 1000 rupees, everything and all. But I am told that as the Aadhaar-based UPI, there have been a lot of frauds which have not been reported. I am not talking about the banking frauds where even the FDs now are being, without the knowledge of the customers, have been taken away by some fraudster. But even in the Aadhaar-based UPI, the number of frauds are going up, and that's not in public domain because the size is very small and the affected people are not the urbanites and all. So how do you, I mean, any suggestions? Because you also head a bank, even though informal capacity, apart from being a part of finance ministry. After this, we'll just take 1 or 2 questions if you have, and then we'll get into the last one thing I want to know.
I'll broaden the question. See, what has happened that QR code revolution has simply exploded. If you see the number of POS terminals vis-a-vis the QR code, I need not give the numbers. You know, many times I go and try to buy with a sabzi wala. I am a poor user of mobile while buying something. And when my wife is not with me, I try to, you know, sabzi wala normally tells कि साहब वो QR code के ऊपर mobile दिखा दीजिए. I try to give them money. Well, that is the way it has happened, and it's happened over last few years. It's really that last mile connectivity which has come. Obviously, identity theft, along with that associated, you know, theft of money from people's account, has also widened, and these put together, along with information security threat and threat to data privacy. You know, these things tend to combine. Are today some of the biggest risks for the entire financial system, not just banking system alone. Now, the way to capture these people are likely to be way ahead of those who are trying to protect the gates, as always happens. And that's where building better information security systems for the bank, which means hollowing the core in the banks and keeping the core small, take more, you know, application-based, API-connected applications which are able to protect the core of the banks from being hurt by open ports whenever these are being used. Secondly, literacy. I'll time and again come to literacy where people have to be very, very careful. Many times, you know, give the passwords, paste your password. And thirdly, the fintechs themselves. The major issue is the fintechs not following up the right SOPs, the right processes within their staff with respect to information security. That is where large number of leakages take place. I guess that is a threat to which all of us have to be very much alive. RBI again on this has given master circulars. It has put a lot of onus on the banks because these are banks and NBFCs are the regulated entities whenever they are outsourcing their services. However, not just the regulation, because that is sometimes ticking the boxes, but the real info and data security, for which now the legal instruments are available, are the key. And that calls for a lot of technology. And I do hope a lot of fintechs, and this is one of the conference, I'm sure there would be a session on info security and privacy. These are two key areas to protect frauds and identity thefts.
Yeah, any question from the audience? Anybody wants to ask Mr. Chakrabarti or Tanu anything? Yeah, this gentleman. Please introduce yourself, brief, very brief, and then we'll have I want to have a last question.
I'm Ramesh. Very useful points you've made. If you see the frauds related to identity, it also has a relationship with the digital public infrastructure that we have. Your Aadhaar system is static. It's a static Aadhaar system. Today, the criminals are far ahead. So I think if you want to get ahead of them, you need reinvestment in digital public infrastructure, going in for adaptive biometrics, which will eliminate the cloning that's possible. Will the government or the banking sector be willing to make that investment, help make that investment? Because you will have to entirely refurbish the entire static Aadhaar system into an adaptive biometric system.
Thank you. Thanks. Both you are heading a bank in a non-executive capacity, as well as you represented the government till recently. So,
no, the fact that there's a
Theoretical,
requirement of investment in info security, which was till very recently, people thought that information security is actually putting a guard. And people treated as if information security is something is not really business area. It's a business area. I guess that is a feeling and understanding which people must have, that it is a business area which is crucial to business continuity. Otherwise, denial of service takes place. You have mentioned identity theft, or leakage of money would take place, which will again create lack of confidence. Therefore, investment not only from the bank side, also from the government side, plus the awareness among the users about what to use, what not to use, where they are at risk, where they are not at risk. Those are actually very, very critical areas. Yes, more money needs to be spent, and I think amount of money that needs to be spent would be again a fraction of the total cost. I don't see it as a huge cost. And I guess, at least I see in the banks, I know of the government, they are alive to it and they're spending. However, again, these things are slow starters, and our best people tend to go to the Silicon Valley, so that is getting those people
any more
back
question
is very
in this
important.
gentleman? Okay, ma'am. So if it's a choice between the two, I think I would go for gender variety. Don't mind, sir. Don't mind, because we have to wind up because your lunch will get delayed. Yeah, please, ma'am.
Thank you, Tamal, and thank you, Otnu, for such a informative session. My question is to Otnu about, as we talk about financial inclusion, the definition of financial inclusion evolving, with more accounts getting open, and it's always we link credit to financial inclusion and nothing more beyond it. And as you spoke about financial literacy, as somebody who represents government as well as HDFC, private bank, how do you see financial literacy actually helping everybody at different stages in life? Because financial literacy is required not just at the bottom of pyramid, but at every level. How do you foresee that? What is your intention of taking financial literacy to a level where we actually achieve financial inclusion and not just in numbers?
Thank you. Yes, sir. We have been discussing, but again.
Absolutely. In fact, since the previous session was slightly delayed, we talked about this issue only. As I mentioned, how did the equity culture spread in Gujarat, UTI was the sole agency responsible for taking it. How did LIC reach out? It calls for outreach. It calls for people who, they had a bevy of agents who reached out to people, met each person individually, told them what needs to be done and what, for example, they have in their hands an account where even 500 rupees could be saved and even 50 rupees could be withdrawn. Cross-sell could happen for banks. How many banks are doing cross-selling? And cross-selling something where subsidies will again come. Atal Bima Yojana, NPS, and there's a host of schemes which I am no longer in the government, so don't remember even, which could go through them, and actually they could straight away be sold on this, where both savings as well as trade. At the end of the day, an account would handle only these two things, money coming in and money going out, and how they can best use the money. For example, in Swanidhi, the trade could come in and all the buyings could, whatever they are selling, all the collections could come in and the money could be saved. They are no longer at threat. Look at a lady hawker going at 7 o'clock or 8 o'clock with 7,000, 8,000 rupees in her pocket. If she had just used this instrument and collected the money through a QR code, which is sometimes very easy, those kind of thefts would not have happened. That's how literacy takes place. Solid case examples. We have both NGOs in this field, and we have fintechs who have been designing platforms which are so very efficient. I think it's a challenge to them. They need to reach out. And we have today excellent digital network available, which will only get better. Though we are not always happy with that. But how many of you drive by yourself? All of you start a Google. So very soon, even walking would be done on Google. So might as well use banking also.
Thanks, Atanu. My last question, and I'm not going to, sir, if you don't mind, just take it off, because I don't want to get delayed. Typically, on election campaign, politicians, what do? If they're running, they skip 2 meetings. And then they manage it. But here it's not possible, so you have to continue. Last one is this. Can you give us some suggestions for the way forward in the overall universe of financial inclusion, be it savings, be it credit, be it insurance, be it other instruments, financial instruments, all put together, pricing, reaching out and all, how to take financial inclusion forward. We will be in the world's 3rd largest economy by 2028 or 2030, whoever you believe, whether it's IMF, World Bank or S&P. So there, how do you take it forward? A few suggestions. For instance, I personally feel that why not make the moment a child is born, a bank account is essential. And those who cannot afford, government is, you were a financial ministry executive previous a few years back, but still you can't remember. I am also can't remember how many honorable PM yojanas are there existing in India. Is it dozen, is it 20, 30, 40, I don't know. Why not have yet another one? The moment a child is born, 1,000 rupees or 2,000 rupees coming from government, those who cannot afford, and he or she gets a bank account. That's only one suggestion. So for me, I don't want to talk. So what are the, I don't know, you can rubbish it, but why don't you give us some suggestions how to take the financial inclusion and on the expressway of Jam Trinity in a meaningful way? What would be your suggestions? This is the last few minutes and we'll end it.
Tamal, very good question that, and an excellent suggestion. Considering the fact that roughly 2.2 lakh crore have been saved on account of DBT itself over last few years when this thing has picked up. I guess it does give government, of course, the managers of the government finances would know better, considering that they handled pandemic also, how much money further they can provide. But your suggestion on opening an account for a child is a fantastic suggestion. It actually improves financial literacy. I wholeheartedly second it. However, I'll come to broader areas. One is I'm not in favor of the pricing. I was just seeing a poll on pricing. I am not for even capping pricing. Allow the competition. If you have a digital reach where access becomes easy for people, pricing becomes that much easier. So literacy, as the lady had just mentioned, I guess becomes key. So my first suggestion would be on literacy. And the literacy, there are means of doing it. We need to do it. Secondly, for banks and NBFCs, cross-sell. Now, they do cross-sell day in, day out. You reach a branch, you will be accosted by people selling FDs, selling insurance, God knows selling what all. Now, Jan-Dhan account is an ideal case for cross-sell, for insurance, for mutual funds. Why don't mutual funds use Jan-Dhan account? Now, they don't. They feel that these guys don't have money. They actually have money. It leads to larger formalization. It's a way of, if you could reach them for, UTI could reach out. That was one of the first mutual fund kind of a thing. Then why not to use this? Thirdly is, we must keep confidence of people. So fraud, identity theft prevention, which has to use right from financial literacy to building systems which have strong information security, and regulator, which regulator has been doing, has been coming down hard on areas wherever they see instability coming in. These are very large buckets in which my suggestions are.
Thank you, Atanu. This is one subject we could have gone on and on till midnight, but we are late and we end here. Before I just say give him a big hand, I must congratulate Vipin and Company and Access for wonderful 20 years running this flow of Inclusive Finance Summit. Very useful. Is a platform for learning for all of us. Give Access and Atanu a big hand if you liked it. Thank you.
Permit me to thank them to hold things like on financial areas in Delhi. I don't find too many of them in Delhi, and this really provides a great place for academics, policymakers, bankers, financial sector experts, and of course people who write on financial sector to come together. Delhi has very few of them, so for the organizers, kudos from my side, and thanks very much for calling.
Thank you, Mr. Athanu Chakraborty, for those very kind words. We deeply appreciate your time, sir, that you have taken time to join us here and for sharing your experiences and insights. A special word of thanks to the anchor, Mr. Tamal Bandyopadhyay. We do have small mementos. I'll request Mr. Bandyopadhyay to kindly accept this small token from our side as a token of our appreciation for your time and input. So, ladies and gentlemen, we will now take a break for lunch, and after that, we will have 4 parallel technical sessions and tracks. Please